Good morning, everyone. It is Wednesday, Wednesday, January
There you
26th.
go, Todd. Almost.
Uh, well, it
Almost there.
feels like February outside, and my brain is frozen. It's well below zero here in Chicago today. It's going to be a fun one. I was thinking about going into the office, and I don't know if it's worth going outside at all. This is Morning Market Movers, where we do live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. And we do have quite a bit to talk about this morning. We are going to be talking about equities, and we are going to be talking about energy. In fact, I just dropped a link in there. We do have this morning oil inventory reports at 10:30 Eastern. And then, of course, it's Fed Day. We are going to hear from the Fed 2 p.m. Eastern, and then 2:30 is their press conference, and we're all expecting to hear that they're going to probably do a rate hike in March. I don't think we're going to get any other surprises given the geopolitical turmoil that's going on and the volatility in the markets, but we will get some additional color commentary on the Fed's plans for raising rates and even potentially how they're going to handle their balance sheet. Before Brian and I jump into it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. As I mentioned, we are going to cover energies first. We've nat gas punching higher, of course, because it's the temperature. It's a bit brisk out there. Crude oil also punching higher. We've got this $87 a barrel level that we've checked off twice in the past, and we're trying our best. It's consolidating right here, just shy of $87 a barrel, and we do have those oil inventory reports. Of course, we are going to jump over to equities. 2 days in a row. I mean, yesterday we really called a bear trap. We saw the market sell off, of course, trying to pull in all those people trying to go short, and then it took off. We did get a sell off at the end of the day, and it is kind of interesting because we are in a full blown risk averse mentality, risk off mentality. Case in point, Microsoft, and we're going to see the NASDAQ taken off today, but Microsoft gave their earnings last night. Microsoft was down 2 or 3% yesterday. They give their earnings numbers after the close, and the market just pounded Microsoft into the sand, took it down another 3-4%. And then people actually read what the number said, and it said, oh, wait, they blew out expectations on revenue. They blew out expectation on earnings. They've given a rosy forecast for the future, and here, and those people who are panic selling after these great numbers came out, Microsoft, it's now up 5% this morning. I think around there.
Yeah, so I have it on I have it on my screen right now if you want to look at it.
So, I mean, these swings, these volatile swings, fear, and greed driving the markets. And we are looking green across the board in the equities, a little bit of change of pace from the last 2 days. So there's my intro for it. I don't want to steal any of Brian's thunder. Let's get into energies first because they're all up. And then we'll get over to those equities before we let everyone go and get ready for the start of the trading session.
I was looking at Microsoft. I was like, oh, look at this. Look at this. Look at that. How about that for a parabolic retracement?
Yeah.
All right, let's go back to oil. All right,
yeah,
so
let's go. Yeah, there we go. All right.
Yeah, oils, this is one of those things we've mentioned lately. Yesterday we got that nice little V action in there. We had 2 days of down. We ended up missing our entries earlier in the week at the 81.80 mark. But now we're just rallying. Thus far this year, we've heard that, everybody has their price targets at around between 95 and 98 is what I've heard. The high side is 105 as demand is increasing, as we're no longer in a pandemic, we're in an endemic. Again, OPEC Plus basically saying that we're not raising our rate, our production rates. And again, just remember that one of the major members of OPEC Plus is Russia. So it's kind of Russia's way to kind of stick with everybody, kind of like a roundabout way. And remember, according to what we've heard, they don't even have the ability to raise production at this point. But as that conflict is still there, we talk about sanctions and everything else. Remember, you kind of can't put sanctions on somebody and then say, but we'll buy your oil, right? It doesn't really kind of work that way.
It's a little
So
tricky, isn't it?
yeah. So again, the rise in oil is kind of expected. We mentioned that earlier in the week when we were driving all the way down that we expected it to go higher. There is a level right here, kind of right above where it kind of tagged, right at $87.05. We went just slightly above that and went up to 18 cents. We've seen sellers step in, but we have a decent top coming in at 87.44. Oil inventory report today should be interesting. The API report came in, and they were expecting a forecast of minus 0.4, and it came in as minus 0.8. Again, twice as big, but that's not like a huge number.
No,
Interesting
number.
enough, if you look at Forex Factory, and remember, everybody has their own forecasts. They all have their own experts. They're coming in as a 1 million barrel surplus. So that's probably going to miss. Again, the API number and the actual inventory are totally different. The EIA is definitely a different source. So, I would say right now that there's a couple different factors involved in that. What it is doing, though, oil rising the way that it has, I mean, it's up 2% already this morning. It has definitely affected the dollar CAD. The dollar CAD is down 73, and that also coincides with some of the news we have with CAD raising. Actually, now they're saying, right now the forecast is that they were not going to raise, but earlier this morning, about 2 hours ago, that CAD is set to raise their rates. And I said there's going to be a surprise this week. Right now, it looks like the BOC is going to be that one. So we're seeing Canada.
And that's actually important. It's important
What?
because the Canadian news is at 10 a.m. this morning, right around the time that we're going to be looking at oil inventories. So
yeah,
10:30, oil is going to have a couple of different things impacting it.
Yeah.
The Canadian interest rates, because it's such
that shouldn't. I mean, well, that doesn't. I mean, remember, it's a proxy, so it shouldn't affect oil. But if they change this, that should be massive amounts of strength coming in for the CAD, even though it's already kind of getting factored in at minus 71. Not everybody is seeing that or seeing that news that they're expected to raise, and we've been talking about this, so it shouldn't be a major surprise.
Yeah, I apologize. You're right. It's Canadian dollar that'll affect, obviously, but the Canadian dollar's got a couple of things that are going to be affected.
Right. Yeah, it's Canadian dollar, and then right after
oil.
Yeah. So it's kind of both, and oil right now it's driving higher into a level of sellers. So I mean, if we take all the geopolitical events out of this, with price driving into an area of sellers before the news, that typically is an opportunity for us to take shorts out of it pre-market or pre-news release. So that wouldn't be bad. This one could come in and it could be an absolutely crazy number. Like I said, oil is one of those ones that there's literally there's a little like one of those outbreaks, spider monkeys throwing darts and saying the inventory today is. There we go. But it could give any number out there. Unfortunately, today being kind of wedged in between an interest rate change in Canada and everybody kind of focusing on what is the FOMC going to say today, I don't think it is going to be as big of a day of movement as we normally see. But with it driving up the way that it is, I would say that, again, right now, if you remove all other details, I'd be looking to get short if we can get up into that 87.44 range. Remember, the way to play this is the 10-3-1. Kind of see what we do after the open with the Europeans, and really not even just the Europeans, but really since late last night, they've been driving this number higher, which again, when numbers are driven high like this, especially in the overnight when there's no huge institutional factors in there, they're typically trying to prepare themselves for a bad oil number. So if it comes in bad, again, look for a reversal on this one. But again, you guys know the strategies for that one, so I don't want to beat a dead horse. Natural gas also in the energy realm. Natural gas is also in an area where we had sellers in the past. Natural gas, the reason we're mentioning it right now, and it's pulled back. It was up over 8%. It's up 7.25% right now. And you can see since late last night, about 10 o'clock, it's gone crazy. It's gone up 34 cents, which is a huge amount. Now, it's kind of in the middle of the range here. If you throw some fib targets out there, you can see that right now where we're at, again, this is not dead on, but right now where there was a gap up, and this has been an area where we had sellers and was confirmed, this is also the 50% retracement level for fibs. So it's definitely one of those levels that, you want to look at and say, well, wait a second, it's up huge. Well, the retail traders say it's up 7% because it's minus, a million degrees in Chicago. We got to go long, right? Well, yeah, but there's going to be profit taking. And remember, European influence on the natural gas market is pretty high, particularly because a lot of their natural gas comes from Russia. And then you see things like this, talking about how the ECB, warns of major economic risk from Ukraine tensions. What I love about this, it says, that Europe's economy would suffer a significant blow if tensions escalate further. Not exactly sure how they could escalate further, minus them stepping over the border.
And having a war.
Yeah. I mean, that's the thing. It's kind of like, well, if they step over, that's it. I mean, at this point, it's kind of like, if you do it, this is what's going to happen. Like, They're not sure what they're going to do. Where is it? The EU is debating what sanctions it could impose on Russia if it attacks the Ukraine. So it's kind of funny. It's like, well, we kind of want to do that, but we need their natural gas. So let the United States and the UK do it. Is kind of what it sounds like right now. But it's just funny that they're like, hey, if it escalates further, like there's only one escalation at this point, right? I mean, I guess they could send 200,000 troops to the border, but I mean, come on. Eventually, it's it's like there's that statement about do something and get off the pot. I think we're kind of at that stage now.
Well,
But anyway,
how de-escalate it. Let's jump over to the indices because this is what everyone's going to be talking about today. We're finally opening solid in the green.
Yeah, I mean, right now with all the Fed funds, I mean, again, it's not expected to rise today. I did mention that I actually expected a surprise. I didn't. Again, if we get it in the cat, I don't think we'll also get it. It'd be very strange if we got it in both. But again, could it happen? Absolutely. Right now, they're saying no, and what they're saying is, and here's the thing: even if they don't raise it today, if they say, but it will be raised in March, that's the same thing as them raising it right now, because the market will want to adjust itself, so it's already baked into the numbers before it actually kicks in March. So even if they make a statement that, oh yeah, we're raising it 25 basis points, right? And what they may say is, we're raising it 25 basis points, but reserve the right to go to 50 if we need to, based off of economic factors. Because remember, I mean, if we de-escalate the Ukraine right now with with the pandemic over, there's nothing holding us back at that point, minus the interest rate. So with everything rocking, why not? Looking at the indices. We'll start off with ES. I'll drop this down to a 15. I left this up there, and you may be saying, well, wait a second, what is this? If you guys attended yesterday, and I hope that you did, I'm just going to throw this on here real quick. We literally talked about Bollinger Bands and when you trade them and when not to trade them. Yeah. So not only did we have the first one set up, this is where I finished speaking yesterday. And what did I mention? It's not like you take it automatically when it breaks, but if it's at a level of sellers, which we obviously had sellers right here, it was confirmed by this candle. It came up, it broke, it hit the seller, and went all the way back down for a 1 to 5.75 trade. Here was kind of one of the strategies we talked about yesterday. Oh, and by the way, here's
those
the squeeze.
Recordings should be up tomorrow, I would hope.
Tomorrow?
Yep.
Depends. It's cold in Chicago.
Yeah. Everything's frozen.
And again, here's the squeeze. This is the other one we mentioned. Squeeze, close outside, and look at the continued rally again in the overnight. So, a lot of cool stuff that we talked about yesterday. If you didn't watch the recording, make sure you go in there and do it. But there was multiple trade setups. Now, you can see we're back up in that same level of sellers. I would say be cautious, and this is not a brand new level. This was just kind of the last push of it, but it's been touched a few times in reality. If you wanted to come back and really talk about where the basing came in, you're getting your clink. I mean, it's hit a bunch of times. There's no reason for it not to go higher at this point. But with it rallying up so much, again, I just mentioned it, a lot of times the market wants to pre-position before news comes out. If they raise interest rates today or say, hey, you know what, in March we're not doing 0.25, it's 0.5, bam, that slams the market. So with the market going high right now, I would say I'm a little bit more on kind of the negative sentiment of things. We know that, yesterday and the day before, the 15 minutes haven't had... I don't know. They haven't had the greatest openings because there's been so much volatility at the open. I believe the YM is the one that had the best setup for yesterday, actually, the YM or Russell. But again, with ES pulling up, it's already up 1.53%. Are people going to look at this and all the support resistance traders being like, woo, look at that right there. If we break it, go long. And then it's kind of the same thing. We talked about the bear trap yesterday, and it went all up, right? And then today, could we have the same exact, scenario? And, let me see. I think it's been too far. Do I care about it now? I can throw it on there. Let's see if there's a fib number in here. Nah, we're okay. We've cleared that one area. But actually, I should be running it from, I guess, probably here. Yeah, we're pretty close. So if I run it from kind of this new high over here, because again, this was kind of a new trend established in there, I guess the argument could be made there's one there as well. But would watch out for, it looks like we can pop higher. It looks like there's a level that's sitting kind of hidden right here. And the reason why I'm marking that one off is because it's also sitting right at the 50% retracement level. This could be a potential reversal. If we're able to kind of get long at the open, 44.6450 is where I'd be looking for that reversal. And again, for the really active fib traders, this was a new trend established in here. It started to blow all this out in here. If we draw from top to bottom in that range, there's a 50% and we have a supply zone sitting right there. So watch for 44.64. Again, maybe a 1030 reversal. I think the markets will kind of basically flatline after that. just in preparation for FOMC. NQ also at a level right now as well. Again, this is a level we talked about, 14,536. Again, we've seen it here. It's confirmed here on a spike up, and it's pushed it back down again. We're kind of at that same level. So again, watch it. It's a similar scenario to the ES. YM, also kind of the same idea. Now, this one had a pullback. It did actually go through. So let's remove this now. I can remove, let's see, do I want to pull this? Keep this on, and watch for a small level right here. This would actually be a target today. Okay. With us pushing higher right now, if FOMC does a raise or is very strong in what they say, and it starts pushing down, look for your shorts coming down to 33,831. Again, that's a 50% retracement from low to high in the overnight. There is some selling in there, and we do have a bit of a confirmation coming off of it. So that would be my initial target to the downside. Where price is, again, let's remove some of these so I can see it a little bit better. It looks like we have an okay zone right there, right above where we are. So again, same scenario, ES, NQ, YM. There's all an area of selling just slightly above, as well as we have 34,800 is going to not be that big of a deal. Yeah, I would say it's kind of the same scenario. As much as I think this is a good, nice little rally. Again, I'd be cautious with it. Russell, let's see the Russell.
Oh yeah, we got one more. I forgot.
Yeah.
Small
Russell,
cap,
same thing.
I'm struggling.
Yeah, I mean Russell, we got a level just a little bit higher. Let's go down to a 15-minute. Yeah, it's this one's a little bit harder. So yeah, there's a level up top, but kind of the same scenario. We've got an area here, here, here. We're bouncing off of it as well. Let's see. Let's take that up. Came through. Yeah, I'm okay with that one. And then kind of the same thing around the 50. Let's remove this and this. So yeah, kind of the same scenario. Now, if they do have a very strong statement later on today, and actually Russell's got some room to run if it can break through the top of this one. So we'll mark that there if we can break through. And the next level will be up at 2,100. 2,100 is sitting right there. Let's mark that off. Put this here. If for some chance we can spike up to this before the news today, I'd say it's probably a decent roll point. Again, 2,100 is a big psychological number. So
yep,
we're looking at. Russell should be the one affected the most. If they start resing, if this is up at a decent level and we're starting to hiccup, again, I don't know what the volatility is going to look like, but if there's any call spreads or any knockouts on there, even potential binaries, because again, there will be some whipsaw effect. If they mention raising rates, the Russell will be hurt the most. So seeing it, it's kind of in the middle of the pack right now. Q is the highest. YM is the weakest. I would look for that one to roll. And again, YM probably has the best short then if it's the weakest right now. Again, if we put just a little higher. So
and I will say this. I think everyone's wholly expecting them to say they're going to raise in March, probably 25 basis points. I am leery that they would say, and again, I always play because I kind of know where they're kind of coming from is they do want to guide, but they also don't want to shock, although I know you would like to see some shocks. But given the geopolitical turmoil and the recent volatility and some other concerns, I'm hard pressed that they come out with some harsh language. I would imagine their rhetoric will be, if
that's
there was
why
going to be
they'll say
to be toned down.
We're going to raise it 0.25, but we reserve, but depending on economic conditions, it could be a 0.5. I think that would be their way to soften it.
Ease the rhetoric. I would expect them to do that.
Yeah, because then it's like middle of the ground. Like, where do we go? Is it going to be 0.25? Is it going to be 0.5? Because then it's like, if it is 0.5, it's like, oh, they said that. And if it's 0.25, and he said they could go up, but it depends on economic conditions. So it's kind of like, it gives a lot more gray area, I think. And again, remember,
and they want to have that room to maneuver. So that's what I would expect. So we will see. It's going to be an interesting day. It is Fed Day. Remember, 2 p.m. Eastern, the Fed's going to be talking. They're going to make their announcement, and 2:30 is the press conference. With that, any questions for Nadex, please email us, customerservice@nadex.com. You've also got Brian's email up there. He is accessible, support@keeptradingsimple.com. If you'd like to email me, I put my email up there as well. And what did we really talk about this morning? What are the hot spots that we're checking out? It's energy and equities. We're looking at those energy markets, oil punching up near $87 a barrel, nat gas seeing a 7% rise. So we've got some volatility in the energies, and then equities, of course. It's been equities all for a while now, but for a little bit of a change of a pace of 2 days where we've had big sell-offs and then rallies, right now we're looking to open in the green. But that is on the heels of some encouraging earnings announcements. So I guess we'll see what the retail trader has to say about all this in 25 minutes. With that, Brian and I will catch you again tomorrow morning. Thank you so much, everyone, for joining us, and good luck in the markets.